Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the Nasdaq Market site in Times Square, we have Chris Dearborn and Max Cabasso, managing directors on Nasdaq's Market Intelligence Desk, for an update on market action following the election and outlook heading into the end of the year. It is great to have the both of you back with me, getting the band back together.
Happy to be here, right?
Oh, yeah. Yes, and I'm happy that a big piece of uncertainty has been removed from the market, and we don't have to listen to political ads for some time now. Chris, I think, judging by the market's reaction, it seems as if it was better case scenario for it.
It really was. So it was a clear and concise election, which really took a lot of uncertainty out of the market. You saw the retracement of that nervous trade. The VIX collapsed on itself, went to a 14 handle from a 25, really quick retracement. The markets shot up. And the expectations, especially with the Trump trade moving forward and with the red sweep, supposedly, if we see how that plays out going forward now, especially with the Senate president being nominated, it was a little bit more free trade related. It's very bullish. So you're looking at a number of different items that the Republicans are generally known for, and then a few things that Trump is known for. So you're looking at deregulation across the markets, which is good. You're loosening of capital. Tax cuts across the board as well. That's going to flow directly into the corporate America, and that's going to be a boon for the S&P, especially on an EPS basis. And then when you look at the rest of the market right now, it's really going to boost the trading aspect of it here in the U.S. because of what's going on with the Fed.
Yeah.
Inflation is kind of in play. The CPI number was in line today. No real surprises. People are kind of taking out the shelter index a little bit more. It's 65% of the CPI number today. But people are kind of discounting that because it's supposedly going in the right direction, but it'll get there. We have PPI and retail sales tomorrow. Keep an eye on that, and the unemployment numbers on Thursday. So from the trading aspect, that's moving very well. Inflation is going well. The Fed cut quarter of a point. It's a 1-2 punch for the market, doing very well. The indexes took off. Russell 2000, small cap gauge, the Russell Micro, the mid cap 400, all the smaller indexes made all new highs for the year.
We'll see if we see follow through, because that has like a 1, 2, 3, let's go, and then.
And we had a little bit of a pullback yesterday on the Russell and some of the other, but that was good because you can't just keep going up one after another. And if we mentioned this before, if you look at the relative strength of the Russell index, it was 73, 74 at the end of last week on Monday. That's an overbought condition. It had the pullback. A pullback is good. To this morning, it's up. This morning and then into the afternoon, it's still holding up 0.5%. It's a nice pullback up. It's a good area.
Max, let's talk about removing uncertainty from the market, because there's two things that really stand out to me. I was in Hong Kong and Asia during the election, which was really interesting to see other perspectives. Whether or not people liked the outcome, everybody unanimously in other areas of the world was like, thank God it was a clean-cut election and we can move on, versus having months of trying to figure this out. Because at the end of the day, people still look to the US for leadership. I think another glaring fact behind that is the reaction in Bitcoin, because it suggests, and this is the first time we've spoken about it in a national election, and it actually does have bipartisan support. Spot Bitcoin ETFs, that was a catalyst, but the perception of regulatory framework in place, there could be nothing more clear than the reaction we saw.
Yeah, for sure. You started to see it. It was tracking with the poly market odds, which had been pointing to a Trump victory. That's when you really started to see it take off. That pro-Bitcoin administration is very clear. The buyers are starting to get in. You're starting to hear more about corporates really starting to get involved. Nation states, do we start a strategic reserve in the US? That's been talked about. Does that actually get pushed through? That's another thing to think about. But if it does, just more tailwinds for the sector. And again, the ETFs, I don't know if we would have had the same reaction without the ETFs, but now the accessibility for retail, kind of normal traders that don't have access, or thought it was too difficult to get access to manage your own wallet, or going through some of the providers of the hosts. Now that you have an ETF, retirement accounts, it's a lot easier to get that involved in those accounts. So you have a ton of tailwinds behind it. You're seeing it here, take it off, and we sold off a little bit now in the past hour.
We have BlackRock on yesterday. They have $30 billion under management in less than a year.
Yeah, it's huge. The demand is there, and again, now that there might be more of a regulatory framework and guidance to say, okay, this is where we're going with it. For the past 4 years, everybody's been kind of waiting. All right, what is it going to be classified as? Are we going to get ETFs? And it kind of kept getting kicked down the road. Now you're getting a pro-crypto administration into office. The PACs for crypto were big spenders here. They were big. I think it was 100% of the elections that they put money behind, they were successful in getting their candidates elected. So you're seeing it. It's not just the presidency. You're seeing it in the House and the Senate. So it's just a big tailwind, for the market.
Yeah.
And really starting to take off. We've kind of been treading, inflation-adjusted Bitcoin prices. The new high was essentially 80,000 when you account for inflation. So got through 80,000, and it's just got taken right off. Another 10,000 right off the jump.
But if you think about it, even from a bigger picture, I mean, the past 4 years, this is not a political statement. It's a fact. The progress in terms of legislating anything was real. I think it was the most ineffective
Totally.
in history. So removing the negativity from that, perhaps we start getting frameworks around AI, digital assets, and then that's when innovation continues to emerge, right, Chris? Because you have an operating framework in which to derive strategy from.
So it comes down to the regulation. When we're talking with the Trump administration coming in, they're probably going to look to move to a new SEC chairman, which kind of would move things along right there, especially specific to Bitcoin. And you told me off camera, being in Singapore and Hong Kong recently, that a lot of the countries there have an infrastructure, but they're just not a big player on the investment world platform. But they have regulation ready to go. If the U.S. can adopt something like that or move along, this will take off.
You get the economic scale and the power of the U.S. position in global capital markets. That's when things really start to take off. Because if you don't have the scale, there's only so much you can do. And I mean, Chris, even think about, and I brought this up in our last panel we just did. Look what happened with retail participation in the late 90s, early 2000s, when the markets became more digitized and the online platforms that are available. Look at the tools retail traders have now. We didn't even have that on the desk from an institutional perspective. So it does, the evolution makes sense.
Plus the zero commission base also helps as well.
Right.
That's another game changer. So it's the evolution that keeps continuing. And if the markets in the U.S. move to the 22 hours a day trading, like you can do Bitcoin 24/7. Equities right now are just 4 a.m. to 8 p.m. between the 3 sessions. They're looking to expand that as well. If that happens, then you're going to have a lot more going into it as well. But that's a different conversation.
Let me push back on that for a minute here. Both of you, on the floor, on the desk upstairs. Bitcoin doesn't have reports that are coming out every quarter. It doesn't have IPOs. We don't open. Both of you open IPOs on the Markets Intelligence Desk. We don't open them at 9:30, so that doesn't get mixed in the big auction where the volatility takes place. So for trading 22 hours, when do we open IPOs? I mean, we'll be working all day long. But you get my point. How could it change the liquidity profile?
It drags it out, I think. The issue that we see from an institutional desk as well, previously trading, it's now pockets of liquidity, where you're in the first half hour of trading, and then the final 15, 30 minutes of the day is where you're getting a lot of your execution done. If you have a VWAP order going in, majority of it's early and late. The middle of the day is really slowing down. It's tougher to kind of build and trade positions. Now, if that gets extended out, and there's even more in trading in the pre-market with less liquidity because market makers aren't required to be there.
Does dinner time become more active when people leave the desk for the day?
It's a problem, I think, because the liquidity just gets spread out and sucked out, so it's harder for institutions. My thing is, I think it will be harder on small caps. For institutions that want to build a position that it's already hard enough. And I mean, there were positions we had where it was, a stock would trade 15,000 shares a day, and we have a million share position, and we're trying to trade 5,000, 10,000, and you're hunting for liquidity. It's really hard.
Or even opening a smaller float stock.
Right. It just gets more and more difficult because there's a lot more action in the pre-market, a lot more after hours. It just takes away from our normal session and makes it more difficult.
And that's another thing I want to point out. Crypto can be 24/7. It doesn't.
But it's liquid.
Well, not
it's
even that.
And it's global.
But you're not reporting earnings at a certain time. You're not opening issues.
So to be fair, what they're talking about is extending the extended hours, which is already not liquid to begin with.
It's at 8 o'clock now, right?
It starts at 4 a.m. and ends at 8 p.m. So the main session is still going to be 9:30 to 4. That sets price. That's going to be the part for the indexes and the ETFs. And that's going to be the part if you're doing if you're a mutual fund manager, your net asset value gets rebalanced at 4 p.m. That's not going to change.
So it's been established that that's how.
That's what the talk is right now. It's so early.
Right.
I can't imagine this. If you want to extend extended hours, there's a reason why they're called extended hours, right? You're supposed to overlap. It's the pass-through is supposed to be global trading. So you're coming from Europe to the U.S. That's why the 4 a.m. coincides with the opening there, and then 8 p.m., 6 p.m. over here coincides with Australia, and 8 p.m. coincides with Japan and into Hong Kong. So if you want to trade equities, you have the ability in the U.S. adding a couple of hours in the U.S. really doesn't make a difference. It will
Right.
add to the volume. It'll add to volatility, and on a price point, it'll add to a corporate's agita. Because when you look on your iPhone and you see after hours my stock is up 19% or my stock is down 22%, and you look at the actual trade and it's 2 shares, there's going to be some misinformation carried
Especially
around.
you guys don't work 24/7, so they have no one to
No.
call on the desk. But
Correct.
that again, this kind of like all took place while I was overseas.
A lot happened
Even
while
from,
you were away.
I know, but even from just basic things in terms of asset management and being able to mark your prices, right? Or what about the Russell rebalance that we do
The
every year?
9:30
Can you
to 4
imagine like not
is the
having
main
that?
set.
Yeah.
Right. To Max's point, and the rule is there's no market makers in the extended hours. They don't participate.
Right.
It's pure liquidity. If you're a retail trader, your brokerage firm tells you not to put a market order in, you have to put a limit order in. Some will let them, and that's where you see that price gap in between. So
Yeah.
the pockets of liquidity are what institutions are looking for. They're the buyers and sellers of stock. Retail is an add-on, even though they're a bigger add-on, and they can drive price every so often. Look at the meme world. The real pockets of liquidity for all equities are in the institutional desks, and that's who the real buyers are with deep pockets.
Right.
And they want pockets of liquidity because they don't want to see price slippage
Well, I mean,
on
retail's
entry
probably trading their
or
pool
exit.
anyway, right? Max, having spoken to Nasdaq-listed companies and issuers within different sectors, is it too early to get any feedback, or is there just not enough clarity for them to figure out how it's going to impact the business?
Yeah, I don't think it'll impact their business. I mean, it's still too early to get their feedback. I don't think it's going to impact them in terms of changing how they're operating. It's just going to be, because some of the discussion I've had with companies is attracting more institutional buyers into their into the stock, and it's being able to put on a meaningful position. And that's the concern, is they're already struggling to get guys that are okay. We like your stock, we understand the story, but for us to put on a what we consider 1% position in our portfolio, that's a decent size of the company,
Right.
and to get in and out, it's just additional difficulty.
So back to the challenge sometimes when
Just
you're a
the challenge of
smaller cap company.
being able to get in and out, because again, if they want to put a position on, and it's going to be sizable, it's great on the way up if if they're buying, but then when you go to try to actually sell that position, you're weighing on the stock. So being able to
Talking
get in
about that
and out is
yesterday
difficult.
on the index, which
Yep.
is super interesting. All right, we're out of time. Great to catch up with you both. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.